is asking you, should we launch a freemium or a sales-led? How would you simulate that decision?
The platform allows you to put in different...
Meet Bern Worth, a lecturer, researcher, and entrepreneur shaping the future of innovation. With a PhD in management science through Venturism, his simulation-based startup, Bern helps founders make smarter decisions with confidence. His work bridges research, policy, and practice, building ecosystems where ideas grow and impact thrives.
like pricing models, for example, and you specify, regardless of what your pricing model looks like, you specify what your customer, what matters to them, relatively speaking, word of mouth, marketing, network effects, which again become more important.
So what decision do you think should never be outsourced to?
I don't think any decision should necessarily be outsourced to a model. I think that's the first, again, where we go back to like not treating the model as, oh, that's a definite way to go. Even if the model shows you one way or another, I think at the end of the day, it's their responsibility for the decisions that you take.
If I write you a check of £10 million right now to strengthen the local ecosystem, where will you deploy it first? How will you measure if it works?
Do I need to put 10 million into one thing, or can
I've given you the check. You do whatever you like with it.
I think one of the...
So Bern, if we met in a coffee line and I ask you, what do you do? How will you explain that to me in a not so complex, simple English?
Oh, that's a difficult answer. I thought we were going to ease into this. I think it kind of depends on what you want to get out of it. Because in the broader sense, I have two hats on: my academic hat as an academic at the University of Glasgow, and then being a founder and entrepreneur. What I would say is, in general, across both of these jobs, that I study complexity and I use complexity to inform decision making, which may be not the simplest answer, but how can we use complexity? Don't treat it as a weakness or even as a bug, but it's a feature of reality. The world is complex. We need to accept that we need to deal with that rather than demonizing that or pushing it to the fringe. I make it kind of the core of my work, and how can we use that then to make better decisions or help others make better decisions.
Wow. You called your work simple model for complex answers.
Mm-hmm.
What does that mean in simple English?
In a simplest form, the way I think about models, and more like modeling, even the process of modeling rather than treating models as the end all, is that they should serve as tools for thinking. So they should help us understand the world. They should help us think through alternatives. And it's not so much about having a model where we know we have a certain input and a certain output, and it's prescriptive in a way that if this, then that, but rather the answer or the insight that we get from the model is more complex, or should be more complex than the model itself. So it doesn't necessarily mean that the model is simplistic or even trivial. Some of them are rather simple, but some of them are complex in itself, but they should then still lead to more nuanced answers than a simple yes, no, or do this instead of that. So that's the idea behind it, that to me models are tools for thinking.
Wow, models are tools for thinking. Thank you so much. So when did you realize entrepreneurship and complexity science belong in the same room or in the same sphere?
I think my career has been a bit serendipitous in a way. I studied engineering in Germany, did my master's in the US, and I worked for a professor there as a research assistant, who got me interested or even exposed me to this idea of that we can use models for like social systems, economic systems, entrepreneurial systems. I used models throughout my undergrad in mechanical engineering for engineering problems. It's quite common to use simulations and modeling in that sense. But until then, I hadn't really thought about that we can apply that to social systems, economic systems as well in the same way. So it was through that I found my interest in that, then did my PhD here at the University of Strathclyde in Glasgow, where I looked at how Scottish universities interact with UK businesses. And again, the idea was that a lot of the existing research either looks at case studies, so individual universities, or looks at specific mechanisms or activities such as licensing or collaborative research, rather than looking at multiple universities, multiple institutions, different types of companies, and different types of activities that together produce or represent the system that we're operating in. Because as you can imagine, if the University of Edinburgh does something, or more recently the University of Aberdeen changed their IP policies, that has an impact on the whole system and the sector. Like, other universities will likely follow through. So you can't capture that by looking at an individual institution. So we need to look at different types of institutions and these kind of feedback effects, and even the interconnectedness between them. So that was when I started thinking about it more and got more into these ideas of how do we model entrepreneurial innovation systems, social or socioeconomic systems more broadly.
Wow. This is good. So I want us to talk a little bit about agent-based models. Okay, system dynamics. All of these things, they sound intimidating.
Yeah.
Can you explain them? Like, I am planning a market launch the next quarter.
Yeah. So the two of them are, I view them as like being kind of on a spectrum. They're not distinct from each other, and we've also built hybrid models that use aspects of both. Even Venturism uses aspects of both. Agent-based modeling is basically a bottom-up approach where you really model individual customers.
Okay.
So we have, what your target market is like. So you did your market research, you want to launch your product in, let's say, the UK first. Your target market is, let's say you want to sell a sports car to men and like they're having a midlife crisis. So you can figure out how many men there are in a certain age range with a certain disposable income, because that's what you need to buy a sports car or as a second car. And you come to a number that, I have no idea, there's 10,000 potential customers. So within an agent-based model, you would model 10,000 individual agents with certain parameters in terms of how likely they are to buy something, how receptive they are to advertising, to word of mouth. So you can model like different aspects of the overall decision-making process. And that then gives you the idea of, we can start by saying, okay, we do marketing, we reach through our marketing 100 people a month, for example. So you run the simulation the first month, 100 people get exposed to your idea, the marketing for your car. And then in the next time step, you reach 100 again, but also the first 100, if there's word of mouth, they start talking to people. So the awareness kind of grows through the system. And again, the ideas behind complexity science or complex systems is that we see similar mechanisms and similar ideas in different systems. So if you think about the spread or the diffusion of innovation, what we're essentially discussing right now in this example, is fairly similar to, from a systems perspective, the spread of COVID. Like the COVID models are also diffusion models, some of the agent-based COVID models. Because at the end of the day, in the model, it doesn't really matter if you and I meet and I talk to you about the car that I'm trying to sell you, or we meet and we talk about I don't know what, but we stand too close to each other and I give you COVID. If I had COVID, if I was infected and you were susceptible. So from a modeling perspective, there's a lot we can learn across like different like disciplines within social science or even beyond. An agent-based model is essentially like the kind of bottom-up version of that kind of modeling. System dynamics, on the other hand, is more of a top-down. So we know what the system structure looks like. So we look at the whole kind of, again, the population of potential customers, and we have people who are potential customers and essentially customers, if we make it very simple. Like, people are one or the other. And we know, or we can estimate potentially, and it's a bit of a guess as well, that if we reach X amount of people that are potential customers, a certain percentage of those will buy the car. So we run the simulation, and without modeling everyone individually, we have the stock of people that then moves from being a potential customer to a customer. So rather than having all the variability and the heterogeneity, we just assume there's like a pool of people, and generally speaking, X percentage of those that we talk to multiple times will buy the car, rather than looking at individual ones. So that's a kind of difference. And then you can kind of start looking at a certain system you want to model, and you might say, well, in this part of the model, we need that detail because there's lots of heterogeneity about the people in here. For other parts, it might not be. It might not be as relevant, and you can kind of almost like simplify the system a bit, and take like a higher level view where you don't need to have all the detail that an agent-based model would give you. So that's a kind of probably 5-minute crash course on modeling.
What's something counterintuitive that your model reveals that most entrepreneurs get wrong?
That's an interesting question. So when we're modeling, this isn't like necessarily like entrepreneurs, but one thing, when we were looking at Scottish universities and like their like entrepreneurial activities and working with UK businesses, what we saw is that there's a lot of focus on, or we need to engage more with industry. But for a lot of them, what you would see is that you kind of reach an internal plateau, that you don't actually have the resources to support that. And by that, I don't necessarily mean like dedicated professional services staff, but even like academics. So what the research has also shown is that in most universities, you have a small number of people, a small number of academics who are really active in engaging with industry, but they're already doing almost like as much as they can without sacrificing other things. So if you want to grow that, it's not just about external demand stimulation, but also stimulating internal demands. From an entrepreneurial perspective, what are things? I don't know if it's necessarily counterintuitive, but the amount of time it takes for like word of mouth, for the simple like people becoming aware of how long it takes for a certain percentage of your market being aware of it. If you think about, I don't know, WhatsApp, for example. I don't want to use like ChatGPT or something because these companies recently have had very steep growth, but people think about WhatsApp and they're like, oh, this is new, and then realize, oh, WhatsApp has been around for 5 or 6 years. Like, and that was back in the day when I was a student. And the problem is that most of us, like assuming like a kind of normal distribution, we're early adopters or early majority, maybe late majority, but we're not necessarily at the very forefront of innovators. So we're not the ones hearing about the technology from the get-go. So you judge other technologies, other companies by that. You think, oh, this goes really quick. What a lot of these simulations then show you is for your own product. If you have a small marketing budget, you rely on word of mouth. Like, it can take a while until you get to that kind of inflection point where it really like goes up. So that's one thing, maybe not necessarily counterintuitive, but an interesting insight that we get. The other thing may be how much effort it takes to even cut through the noise, especially if you have competitors already in the market that are relatively well-known brands. Then it can take a lot of work on your end in terms of marketing budget, in terms of getting people to recognize you as a brand, as something that they talk about, to, you know, potentially getting them adopted or them to buy your product. And again, that typically takes longer than what we might intuitively assume. And part of that is probably, I don't know if we get to that, a bigger problem in terms of everybody wants that hockey stick curve growth, and ideally, like, you know, next year better, even like this year, where, you know, it is like those are outliers in many ways. So I think there's different things about, I think that the time aspect is certainly a big thing where people, it's like a bit eye-opening for people how long certain processes really take and how long they might take for them, especially if you don't have hundreds of thousands or even millions to spend on marketing if you're not VC funded, for example.
Wow. So Ben, I want to ask you, how do you know your models are not just stories, and what does good enough to bet on look like to you?
I think we need to start from the premise that all models are wrong. Like that's a fundamental basis, and it's just the nature of, it's not limited to agent-based modeling or system dynamics or even the whole type of modeling, but by definition of a model being a simplification of reality, you're omitting certain things, which means you're leaving out certain things. Hopefully, ideally, you capture the essence, the core dynamics that drive the behavior, for example, whether customers adopt your product or your service or not. But you are leaving things out. So the model is always going to be wrong. The question is it useful? And I think that's where, going back to the beginning, where we talked about models as tools for thinking. I'm not using this as an excuse to say like, oh, it doesn't matter what the model shows, it's helpful. But I think moving away and setting the scene in a way that it's not just about, oh, the model shows in year 10 we're going to hit X million in revenue or profit, but it's about looking at the outputs in almost like a qualitative way, like what do these dynamics show us? We are in general, both for venture as in academia, you typically use a combination of tools and methods to kind of build confidence in your model, in your simulation. Personally, I try and stay away from the word validating, because valid is a binary concept. Again, it implies that either something is right or wrong, and we already know it's wrong because it's a simplification of reality. So by definition, it's always wrong. But move to this concept of confidence building. How can we have confidence in the model that the model shows us something reasonable? That goes back to what is the structure of the model. So validating that, are we capturing the right dynamics? Are we capturing the right mechanisms? Is word of mouth, for example, important? And for venturism, that's part of what the entrepreneur does. Like, you're not, as the entrepreneur, you're still at the heart of that simulation. Through with the choices that you're making, you're really setting up the model and what happens within the model. Because you might have markets, you might have a B2B product where there's very little, like word of mouth doesn't really matter. It's really about objectively, are you better than what's out there? Do you have the certifications, all the security and everything in place that it's enterprise grade? Like these kind of rational factors play, in most cases, a much bigger role than what others might think of it. It doesn't matter. It doesn't necessarily mean, not that it doesn't matter, but it doesn't necessarily mean these things are completely worthless. But you can parameterize, you can shape the model. So it's the structure of the model, right? Are the parameters right? And that's, doing research, triangulating data, talking to people, secondary data, whatever might be out there. And then looking at, and that's part of what we do, for example, with venturism, is looking at companies where we work with entrepreneurs and say, well, you're selling now. Like we kind of know what your first years of sales and looked like and how long that took, what you're doing in terms of marketing. So we're almost trying like reverse engineer. If they would have used Venture at the very beginning, does that map on to where they are now? And if there's a discrepancy, where does it come from? So we went through multiple iterations where we've tried to like do things like that, and it didn't initially work out because things were missing. Like we missed important dynamics that the model wasn't covering, and we're at a stage now where we're getting there. We're getting to a point that we think the model does that. Interestingly, if one more kind of point on that, and it was something that surprised me even when I was talking to investors, and not investors in the sense of them investing in Venturism, but them using Venturism potentially. It was really interesting that their first question wasn't, can I trust the numbers that come out of it on the other side? But almost all of them immediately picked up on the idea that normally I get a slide deck with a hockey stick curve because the entrepreneurs knows that's what I want. I'm not going to invest unless I see non-linear growth, basically. So they're all giving us that. So it doesn't really matter. They then need to kind of go through and work out, well, what are the assumptions behind that model, behind what the entrepreneurs have given us? Does this make sense? Do we think they can actually achieve this? What Venturism offers them is basically, if the entrepreneurs were to complete that and share a version with the investor, you basically just turn the page, go back a page in your book, and you see all the assumptions listed there. And you can go through market size. Yeah, that sounds about right. Which, what kind of aspects are more important to the customer? That sounds about right. Loyalty, I would say they may be a bit more loyal. So in an ideal world, and again, that's what Venturism offers, is they can make a few changes, how they perceive based on their experience. They can rerun the model. And again, we look at what that looks like. Of course, if they change something, the model will most likely look slightly different.
Definitely.
But if the dynamics are still the same, then you're kind of like, okay, we're both kind of coming to the same conclusions here. This seems like a good basis to start. If the outcome is really different, for example, like in the entrepreneurs version, you really have kind of hockey stick like growth, but it's kind of stagnating, or it like flattens out quite quickly, or it doesn't even really get off to that point based on changes that the investor makes. That isn't necessarily bad, and that was the interesting part, that it didn't take me to educate them on that in a way, but they already realized that per se isn't bad and doesn't mean necessarily that the entrepreneur is wrong or anything. But you then know where to look. You can go back to entrepreneur and say, hey, these three assumptions, I'm not convinced yet that what you have is right. Can you give us more like detail? Why do you think that is? And so again, the model isn't just about the output. It's a tool for thinking about and points us in the direction of where do we need to look? Where are aspects of the business model that maybe we're not sure about? Where do we put our efforts? So rather than like, I disagree with your outcome, all of this is wrong, or redo everything, you can be much more specific and have like focused conversations around certain aspects of the business model or about the customer profile or whatever it might be, that not only saves time, but again focuses you on where the attention is really needed. So it's not, yes, we need to based on past data and everything, we try and build models and parameterize things that so it works, but again, every model is slightly different. Things change in the environment, so you'll never get to like a true right, but that point of almost like collectively working on with other people, with other stakeholders, working through the assumptions and thinking about the assumptions and what that means as and having confidence essentially that it shows. So that's what we're working towards, and it's not just us, like it involves the user as well.
Awesome. So I want you to give me a live example.
Mm-hmm.
I want you to give me a live example. A startup is asking you, should we launch a freemium or a sales-led? How would you simulate that decision?
So the platform allows you to put in different like pricing models, for example, and you specify, regardless of what your pricing model looks like, you specify what matters to them, like relatively speaking, word of mouth, marketing, if there's network effects, which again become more important for, like, think about Facebook. It becomes more valuable for each user the more users are there. If you're the only person on Facebook, it's not, you might as well not have it. So all these things you specify, and then you can look at your pricing. You can look at what you charge. How sensitive are the customers to prices, to price changes. A lot of that again comes back to like your market research. So at the end of the day, as an entrepreneur, you can game the simulation. You can rate yourself everywhere a bit higher than your competition, for example, and the simulation will be favorable to you. But again, that's where, it's not so much just about the pure outcome, but going back, like if you compete with Google and you say like, well, our infrastructure is better than Google's or AWS, I think every investor will look at that and be like, I don't think it is, unless there's a secret that you haven't told us yet. But again, it allows you to like validate these individual bits.
Variables.
So in the model, you can then run different simulation with different parameters, with different pricing models, where you can explore like freemium versus non-freemium. So it might be, for some people, it might matter that there's a free version. They're very like price conscious. Or they have like a high loyalty to, like, if they're already paying for something else, they might try something for free, but wouldn't immediately change over to another like solution that they need to pay for. So these things you can kind of specify in the parameters, and then run simulation and see what works best. Similarly, if you have different markets and you look for different customer profiles, should you go B2C first or B2B first, or UK versus Europe or the US? Again, the customer profile changes slightly, but what you're offering, your pricing model might not. So then again, you can run simulations and compare those solutions. So we designed the software to be very flexible to what you can handle and capture this tacit knowledge that you have, and that whatever you know about your customer, about your market, about your competition even, all these things that if you were to use just an Excel spreadsheet, it kind of gets lost. Because if you look at these complex looking, they look complex, they put people off when they see an Excel spreadsheet, especially if they're not from a technical background, and it's just full of like numbers. But it doesn't really matter how complex the spreadsheet is. All these budgeting, all these forecasting spreadsheets, they come down to one number and one number only. And that's how much are you going to sell when? Everything else, you can tally up your cost. The cost side is fairly straightforward, especially nowadays with ChatGPT and Claude and everything. What would X cost me? Or, it can help you make estimates, and you might even know what you're paying for rent or production or raw materials, whatever it might be. That's easy. On your income side, if you know what you're selling and when, you just multiply it with whatever price you're charging, and you have your income, and then you subtract one from the other, and you have your profits or losses. So that's all, like, relatively speaking, easy. What it comes down to really is that one number of how much are you going to sell when. And what you see quite often is that entrepreneurs know, well, we've already talked to 10 businesses and 5 seem really interested. So we're launching next year. We can probably get those 5 on board. Okay, we sell 5 in year 1, multiplied by the price, gives us income for revenue for year 1. Year 2, well, if we can get to like 10 or 15, let's say it's B2B, larger volume. If we get to 10 or 15, great. Year 3, let's say 10. Year 3, okay. If we expand to, we don't get any other funding or anything, we get to maybe like 25 or 30. And you're kind of building that hockey stick, because like, oh, we grow a bit more, we get more resources, we hire another person. But you lose all this information about that you might have collected about the customer, about the market. So think about B2C, where you have potentially 1 million people in your beachhead market. It's easy to think, okay, we know 50 people or 100 that we've talked to. We'll get them involved and there's word of mouth. But what does that look like? It's impossible for most people, definitely for me, to compute in my head if I know there's 1 million people, they're in certain communities. They're not even just like everybody knows everybody else, but you have different communities, or it's influencer heavy. In a year from now, how many people know about your product that could even that are even aware of it? Not even meaning that it's the preferable product for them. They might know others. They might already be using others. But even that awareness. And so I think that's where venturism comes in. That's where we can run these simulations. You can test out even different structures in your market, like I said, whether it's more influencer heavy, or you have 2 markets where one is more influencer heavy, the other one is more community based. So you kind of intuitively know, if I hit one community, they all know each other, they talk to each other quite well. So people will be aware of our product fairly quickly. But that doesn't mean we're going to hit the next community, that it spreads to the next one. So your adoption or even the awareness might look a bit more like almost like a step function, where you hit certain communities one after another. But how long does it take? When does one person from one meet the other and actually talk about this? What's the likelihood of that? So these are things that you can't really do in an Excel spreadsheet, and where then the simulation comes in really handy, where you can model these things. And at the end of the day, you put in all the information into venturism,
okay,
but one. And that's how much are you going to sell when. So everything else you basically put in except that. Whereas in your spreadsheet, everything kind of evolves around you estimating that number yourself. And that's the kind of big difference where, and where you can see then the impact of the different strategic choices that you might make.
Wow. So if I'm building a marketplace, just looking for example now, what variables actually move the needle, and what's the noise we should ignore?
It's a difficult question. I mean everybody who wants to use venturism, please go to the website. I'm sure we can link it in the in the notes section. We're onboarding our pioneer customers at the moment. Just sign up for that. I think the model has, even in a kind of like direct to or like not a two-sided market, but you have one customer that you sell to. I think even that has about 70 or so variables at least that you kind of think. You don't necessarily need all of them. There's like whether you have funding, whether you have investments, so you can also model cash flow and things like that. Wow. If you want to, but you don't necessarily need to. Like that, for example, is optional. But just covering different parts of your customer, of your market. Again, if you don't have word of mouth, there's certain things you don't need to answer because it's irrelevant. If you have word of mouth, if you have different customers, again, there'll be more. So there is quite a lot. And again, the importance of different parts vary based on what your market looks like. So if it's a B2C company. I'm selling something directly to consumers, and it's heavily word of mouth. There's influencers and everything. Yeah, that will move the needle. If you need to get in, there's a certain path dependency of getting in, getting people, especially if in combination with that, they're loyal. Like, yeah, you really want to be like first to market potentially, because other companies would need to be significantly better than you to like move them away from you. In a market, again, back to the previous example that we talked about, where you sell to companies, like word of mouth might not even really be, like it doesn't move the needle as much. But again, that's also partially how you parameterize and what you tell the model to do. So there isn't necessarily like a right or wrong answer. And I think that's, yes, you can game the simulation, just make yourself look better than everybody else of your competitors, but you can do that with everything else. You can do that, it's the same on a spreadsheet. You can just assume you sell more, but you're not proving anything. You're not really exploring anything. At the end of the day, you do this for yourself. Like, you want to know, is this something worth doing? Like, the whole idea being that we can model things, we can try out, we can explore alternatives without committing actual resources. Yes, it takes you some time to do market research, but we don't need to produce anything. We don't need to build a prototype. We don't need to talk to everyone, but we can build these models and see which strategy seems more viable than the other. Again, then spend more time understanding some aspects of it. Maybe rerun the simulation with different parameters because we've learned more. See, okay, it still looks promising, let's do that, rather than we need to build something immediately. So that's a long-winded answer of saying it's not necessarily one or two parameters, but understanding your business. And again, I think that's where the simulation helps even the entrepreneur as a tool for thinking, knowing or being guided through which aspects do I need to understand in terms of the market, in terms of the customer, in terms of our business model. What are things to consider?
Well, thank you so much. What does Venturism, what is it right now? Is it a tool? Is it a platform? And what can a prospective or a founder, what can I do with it in an afternoon?
I mean, you can, if you've done your market research, you can probably build out a full scenario in an afternoon, in a couple of hours. That's feasible. And you can also do it without having done the market research. But again, it goes back to the point of then it's just your opinion, basically. It's not grounded in any sort of data. So it might be right, it might be wrong. You can't really trust the output if you can't trust the input.
The inputs.
What it is at the moment we're really focusing on helping entrepreneurs. So we're building out that entrepreneur side of it. And we're also working with universities for like new venture creation style courses to give students the opportunity when they think about their new venture, and normally they would write their business plan or complete a business model canvas, but you never really see what that might look like. Again, you might come up with numbers of what you think it might, but you don't really get a chance to experience with different scenarios because you don't really know what comes out of it. So again, it's also a bit of an educational tool, and hopefully increasing the appetite of students and like, hey, we did all this market research and everything, we put it in. This looks promising. Maybe we should do something about it. Maybe it shouldn't just be a project just to get a good grade, but we should engage with the university incubator or entrepreneurship program and do more. So we do hope there's a bit of an aspirational aspect to it as well. But at the moment, we're focusing on that side, helping entrepreneurs make decisions with more confidence. So you can create as many ventures as you want. For each venture, you can create different versions. So if you want to compare different markets, different strategies, whatever that might be, or you might want to look at bootstrap versus raising money. What would that look like? If we could hire earlier because of that money, we can potentially sell more if that's one of the things you would need the money for. or we could get to market faster, knowing that there's other companies working on this, and either we're the first to market or we might not be because we're bootstrapping and it takes us a bit longer. So again, all these things you can compare with that as like different versions of the same venture. Basically, you can share it with like your co-founders, you can share it with mentors, for example. If you have somebody in your network that you trust, you've been working with, you can send it to them. They can kind of comment on it, or they can even make changes depending on what you do. So at the moment we're focusing on that part, but the goal is to ultimately it being a tool for everyone in the ecosystem to make decisions with more confidence. So having the investor side as well, where there's a direct interface where you create a venture and you've been working on it, and you can make it searchable for investors. So they get, they can have a look at who's building what in Glasgow, for example, in Edinburgh, if they filter by that, and you make your location available, or you say, we're in this market, we're looking for funding, and things like that. And again, it allows them to not only look at what the projection is and what the direction of travel might be for your business, but again, turning the page, going back to, these assumptions make sense, like that, or even if you give them permission that they can experiment with it, they might change a few things, and they're like, it kind of holds. Like, they might be a bit optimistic, but this seems legit. So that's the next kind of stage that we're getting to. But at the moment, it's really focused on entrepreneurs, and we try and make it as accessible as possible, both from a technical side as well as with the pricing and everything, to get people to use it, because at the end of the day, we want to help entrepreneurs. And I want to, again, use complexity, use these kinds of approaches to help people make better decisions, ideally.
Help people make better decisions. Now, in making this decision, where does the data come from? Is it from public benchmark? Is it from founders? Is it from your priors? I'm asking, how are you avoiding garbage in, garbage out?
You can't completely, because again, you as a user are free to put in whatever you want. The moment the version that is live at the moment relies purely on your own research, your own data. So we don't necessarily, there's some assumptions built in the model that we've seen for certain types of businesses, but the general dynamics, the main dynamics are all driven by your own research, by your own data. That's why there's about 70 or so the variables in there potentially that you need to, and sometimes it's a yes, no, sometimes it's you need to estimate a value. Sometimes it's a number in terms of what the size of your market is, or some are more, what is the relative complexity or novelty in your product, and we give you like a range from like 0 to 1, what that means. 0 being something like you're opening a new bakery next to another bakery. Like, there's nothing new, which is not a bad thing, but it's just not new. Whereas if you go towards the other end, towards genome sequencing or something like that, like would be like a 1, like something that's radically new, that's going to change what's possible for humanity. So there's lots of different types of information and things that you need to put in, and you need to, ideally, there's like text fields where you can give like a rationale for why something is. You can put in a citation of comes from that report or this report, or this is based on interviews that we did with industry experts or potential customers or academics or competitors. Even you might have talked to them at industry events. So like evidencing where things come from. You can upload documents as like, so if you go back, or if you share it with an investor, they can go back and you'd be like, yeah, see that report, that's where that number comes from. They can go back and be like, okay, that seems like rigorous research, or like quality material that we can rely on. So it's still on the user to like do a lot of that. We are working on a suite of AI tools that do some of it.
Okay.
For example, kind of cross-checking some of the things that you might describe your overall strategy. And if you say, like, oh, we're going for like the high-end clientele, the higher end market at a higher price point, and that's how we position it, which means you would assume you're also having a higher price point, like relatively speaking. But if your actual price is then barely above or not even like higher than other competitors, like it raises the question of, is that really the case? Because there's a psychology behind prices that we attach value. Something is more expensive, we at least instinctively like put more value on it or think it's worth more, so that it would flag some of these like inconsistencies potentially, or would even help you find data. But even with that, what will never be, or what we're trying to avoid, is taking the human out of the loop, that you basically just say, I want this business, and AI does deep research and completes everything and runs it and presents it to you. Like, we want you in the loop, saying yes, no, changing suggested parameters and things like that. Because at the end of the day, we believe that you as the entrepreneur matter. Like, you have unique insights. There's something about you want to do something, that you have an insight or you have an idea. Like, we want your view on this. Just because everybody does it one way doesn't mean you need to do that. Like, that's quite often like, you know, why we need newcomers to an industry to really shake up an industry, because everybody does it a certain way. So just saying, oh, this is how everybody does it, is how it should be done. So that's why we want the entrepreneur in the loop. We want the entrepreneur to like make decisions, change things, and not necessarily rely on what an AI assistant, for example, might suggest for certain values. But again, help you make better decisions, help you maybe find data that you've not found, or just cross-check things for you where your thinking might have evolved, but you haven't maybe updated certain parts of it, and it flags like, hey, in this part you described it as this seems inconsistent. Or maybe it's just inconsistent because, again, that's the status quo, but you found a way like, no, this is what it should be. So the ultimate control should be with you. And it also means whether it's garbage in depends on you.
So in building Venturism, was there any part of the products that you had to remove because users were not using it, or it's not relevant to user?
Not yet, at least. Okay. But it also, because it's bootstrap, we didn't have like resources to build all sorts of features. I think we have a long list of features that ideally we want to build at some point, but we've been very careful is maybe the wrong word, maybe very conscious about which features we build around, like what do we really need at this point. One thing was because we knew we wanted to work with universities, both because I think it's an important market for us, but also a good market for the platform, because if it's an undergraduate class, you get a few hundred students trying out the platform. So that's great for us to learn what works, what doesn't work, rather than 200 individual entrepreneurs that we would need to find and convince. So we built a feature that's very easy to onboard like groups through one link, and then you as a lecturer, professor, have like a list with all your students, and they can submit a version to you for review fairly easily. So we built a few features, or like sharing or collaboration, but we've not really built much else beyond that, because we want to validate that the concept works, the simulation works, then get the feedback on that, and then iterate through, rather than building a lot of functions and features that might be nice to have but also aren't essential at this point. So far, I don't know, maybe it's a sign that we haven't built enough, or we've been relatively successful in building out the core of what we need.
Awesome. So who will you say is the ideal user? Is it pre-seed teams? Is it growth stage? Or investor doing portfolio triage?
I think at this point it would be pre-seed or seed stage entrepreneurs or startup companies. Mainly because we have one of the features that is coming is about secondary markets. Because quite often, like your beachhead market isn't necessarily like the biggest market to get into. It's one that's strategically important to then typically expand or go international or whatever it might be. A lot of companies here might start out in the US and then go to start out here in the UK and then go out to the US. But you might need people there. You might need representation in the US and everything. So it would be a big investment to start there. So for a kind of seed stage company, if you raise that kind of money, that's typically what you would raise the money for like expansion, for scaling. But you have that initial market traction in your beachhead market. You've achieved that. So because we can only model one market at a time, at this point, like entrepreneurs in the earlier stages, where they're really thinking about which market to pick. What is the beachhead market? How do we get into that? How long does it take? Maybe how much investment do we need? What does the cash flow look like over time if we do that? How long of a runway do we might need until we really get into like revenues? So planning out all these things, like that's really where the current strengths are. And they always will be, but there will be additions to that where you can then model like a follow-on market where you could set a trigger in the simulation that if we reach X% market share or a certain amount of revenue, that you would then start dedicating resources towards like the next market, and you could model that. So I think at the moment we're really focusing on like early stage entrepreneurs, and whether that's first time entrepreneurs, serial entrepreneurs. I think it might even be easier to use for serial entrepreneurs because they might already have an understanding of their market and might already know kind of what they're looking for anyway. But ideally, and the feedback has been positive so far, we've built a platform in a way that it also guides particularly first time entrepreneurs through what they need to look at, which are the important aspects of their market, what are the characteristics of the customer or the market that are relevant to their business.
Wow. The questions that I'm going to be asking now will be a bit of sparring question, just to challenge, just to give further, because there will be some people who are listening who are skeptical. I want us to have some couple of few questions that will address their challenges. So what decision do you think should never be outsourced to a model?
I don't think any decision should necessarily be outsourced to a model. I think that's the first, again, where we go back to like not treating the model as, oh, that's a definite way to go. Even if the model shows you one way or another, I think at the end of the day, you still bear responsibility for the decisions that you're taking. So I think that's the first thing. Like I would never say like use the model to inform your decision making.
Awesome.
Use it to as a tool for thinking, as like, okay, this might not work, or if we change this parameter even slightly, like the impact is quite huge. So maybe we just need to do a bit more research to be sure on what to do here, rather than, oh, the model showed us this, we should definitely do this, when it maybe might have a high sensitivity around certain parameters. So I think that is still on you as the entrepreneur to ultimately stand there and say, yeah, this is the direction I want to go. I think otherwise, if we think about it, which parts of the business should you model? I don't think there is necessarily anything that you shouldn't model. I think it's just always looking at it with that caveat of, don't treat it as like a forecast is theater unless you can rehearse alternatives. Like if it's just like it's a show, if it's like the one thing, but if we can really play out different other versions of it, then again it gives you confidence that maybe it doesn't quite matter what we do now, like both seem reasonable, or everything else being equal, this might be the better choice than the other one. And we might trust the model, we might trust the simulation and go with that. But equally, if everything in your research kind of points towards one option, the model to another, you might want to think about, like, did we capture everything right? Is this maybe an edge case where the simulation isn't perfect, isn't ideal, isn't useful for us? Maybe there was things when you were completing the inputs for the model that you felt like it's not quite capturing what we need. And that might well be the case, because you can imagine the breadth of different companies there are and where they differ. So there might be explanations for why the model is just not useful for you. And again, it doesn't mean it's not useful at all, but it's just the kind of unique combinations that you feel like it doesn't quite capture where we're unique. So that might be why it doesn't quite show that we'd be successful with the strategy. Which then doesn't mean you shouldn't do it. Like, most likely, like, you should still be doing that if all your research, all your knowledge and everything suggests that's the way to go. And in that case, please let us know. So there's maybe other variables we need to capture.
Awesome. So isn't overfitting a risk? Tuning the model to explain yesterday, while missing tomorrow.
Yes, and it's also part of, for us, striking a balance even between how many questions, how many variables are there, and how many should there be, and do we get that right? Like, are we capturing enough to let the entrepreneur really model what makes their startup or their new venture unique and distinct, without trying to capture just everything, and then getting to a point where it's even hard. Like, if you think about the underlying model structure, like, it becomes so difficult to like disentangle the effects of different parts then. So it's a delicate balance of not having too many parameters, but having enough that an entrepreneur is able to really model what makes them unique, what makes them distinct, why is it a good fit for their market. In terms of overfitting in that sense, because we're not really benchmarking you against others necessarily, it's a bit less of a concern for us at this point. It's more which aspects can we basically generalize, and which aspects do we need to give you the choice to make decisions and tweak it. And I think that's the kind of main balance for us.
Wow, that's really nice. I hope the question is not so hard for you.
No, it's fine. And I mean, it's part of what you need to go through as an entrepreneur in general. I mean, we had really positive feedback. We also had negative feedback. Like, I think we've been rejected from as many like competitions and things where or rejected more than we've won things. So it's part of it. But to me, again, it points towards understanding where people are coming from. Is it that we need to do a better job on that kind of educational side and showing how simulations can be helpful, how this kind of modeling can be helpful, where we see that even in academia, that not everybody is necessarily open to it. There's like a certain assumption that, aren't you just modeling what you want to, like, aren't you just modeling what you want to come out of the model? Where then comes back to like, well, how do we build confidence in the model, demonstrating that here's the structure of the model, here's where all that comes from, like in academic papers, like really laying it out, everything that goes in, and showing like, well, this isn't Like we're not like this model could go either way. Like it doesn't necessarily like we're not trying
to
to like get to this
a particular
this
result.
particular result, but we're modeling this problem and then we're looking at alternatives. So is it that when we pitch venturism to people that they're just, or maybe they've just not come across it because everything they've been exposed to was, you know, spreadsheets and other types of software that doesn't allow to do this, and that's fine, but it tells us that we need to do more on that side in terms of how does it help, how do you understand the model, how do you use it as a tool, for example, or you know, there might be other reservations towards the model. So I don't necessarily see it as a negative. If people have questions, I think it points us in the direction of where do we need to do more in terms of communicating it in the right way.
That, you know, communicating it in the right way is a lot of work, and
Yes.
that's one of the works that any entrepreneur building something that is a little bit different from every other person has to go through before people you know, now adopt it and now start using it before it becomes a norm. I'm sure you already know.
Yeah.
You already know all of this. So you did work with OECD and Ecosystem Research Network.
Yes.
Okay.
That's part of like a lot of my research, not directly linked to venturism, but within the university also centers around ecosystem.
Yeah, so I wanted to ask about if there's any policy lever that actually improves startup outcome here in Glasgow.
I mean, I guess that's the golden question. If we think about some of the data recently has been quite encouraging, even for like the whole of Scotland. Like the latest GEM data points towards we have a high level of more and more people are involved with like early stage entrepreneurship. I think 10% of the population is relevant to that survey. I think if you include people in leading businesses that are more established, I think 1 in 5 would be considered an entrepreneur in Scotland. So we have positive signs. I think there's still work to be done. It's hard to like disentangle. We're talking about an even more complex system because you don't have one company, but a whole ecosystem full of them. You have investors, you have policymakers, you have markets, you have support organization and so on. I think there is this notion of ambition, and it's been mentioned for a long time that, you know, we compared to the US, we're not Scottish people, and I've lived here long enough that I include myself in that. We're not necessarily like outgoing in the sense of like, oh, I want to change the world. Like that doesn't feel natural to people. And so it's that, I think that changing that ambition. But if we want to do that, we also need to put the support and the environment and the ecosystem in place for that. I think in terms of like early stage funding, Scotland and Glasgow is doing well, but we see it over and over, whether talking to entrepreneurs, whether even like investors highlight that, yeah, that kind of follow-on funding, like we don't have VC money to the degree that other ecosystems do. And that's an issue if you really want to scale. But it becomes a chicken and egg problem where, well, if we have these companies and they can't scale because there's no money, well, you're also not, because they're not there, you're not attracting investors to come here, to put their money here and, you know, locate here and have an office here rather than just having one in London and be really integrated. So how do you kind of kickstart that? And I think there's probably ways of looking at the critical technologies in Scotland. I was recently involved in a report together with the Scottish Science Advisory Council around the critical technologies, and a lot of the things in focus groups and discussion that came up is like, yeah, how can we kind of build a super cluster across these individual clusters that we already have, and try and leverage that to bring money here to help some of these companies scale, some of these companies come out of universities, and because they need investment. Like we're not talking about building something that is ready to go to market within a month or two. Like you sometimes talk about years of additional research or development that needs to be done until you get to something that can be sold. So it's impossible to do it without that. I think the other thing is, in terms of, and again it goes hand in hand, is having the right people with the right mindset and the right like quality and experience to help entrepreneurs get there. And I'm not saying we need to turn everybody into just chasing being a unicorn or having a ridiculously steep hockey stick curve or anything. But if some companies need that because you need to get to market or you miss your opportunity. For some companies, we want that because it's not just about making money, but there might be environmental, social, other like impacts that we want, that is good for society. So how do we make that happen? Like how do we help these entrepreneurs, if they're first-time entrepreneurs, to scale? Do we have mentors that have seen it, that maybe have done it, but that see the true value in a company and how you position that, how you scale that, is the other thing. And I think that's really where the ecosystem also needs to come together. And I don't think there's an easy or straightforward solution to that. A lot of that is, if we grow more companies that scale and that maybe exit, well, then you free up entrepreneurs to do other things, and they've done it before. So if we can keep them around and become investors, become mentors, help others, they'll be great for the ecosystem, whether it's Glasgow or in Scotland more broadly. But it's I think it's thinking about how can we kickstart some of these like feedback loops. And that's, I think, the main challenge that we're facing. And quite often it's that kind of chicken and egg problem. And we need, I think, policies and an approach that isn't based on a year-to-year or even 2 or 3 year kind of window where we expect to see change. And if that's not there, we're going to rethink everything. But it takes time for these changes to happen, for companies to grow, for companies to scale, for the culture to change. I think there is a change, but it takes time. Like culture doesn't change within a year.
No.
We're probably talking 5 to 10 years, somewhere in that range, where we'd see a meaningful change. in the entrepreneurial culture. So I think that's probably one of the biggest things is, designing policies or designing support structures and systems that take this more, like take an appropriate amount of time to see that come to fruition before we necessarily abandon it, or it doesn't mean we can't review it, doesn't mean we can like pivot or make changes if we feel like it's not working or the feedback isn't good, but
I'm not just scrap it. Not
just keep being the cycle of we start something new, scrap it, we start something new, and then wonder why nothing happens. And entrepreneurs need to adapt. If funding structures work differently, if support works differently, at the end of the day, like they need to adapt, which costs them time that they could spend on building their business. So again, making it as easy as possible for them to access the support that they need without wasting time on finding that necessarily.
Wow, that's really, really incredible, because that's one of the major things that we were thinking about when we started this podcast. Because it seems to me that there are a lot of amazing entrepreneurs here in Glasgow and here in Scotland,
Mm-hmm.
and Scotland is small when we compare it to the world market, when we compare it to the US, compare it to the whole of the UK even. And we started asking ourselves question that, okay, is there anything we can do to showcase the amazing things that are being done here? And that's one of the things that we know to do is doing this podcast. We're trying to see if we can get people from the US to see this podcast, begin to use the products that comes out of Glasgow. We are looking at, can investors watch this program and be able to say, okay, can I get in touch with this founder? Those are the things that we, as a group, that's sort of what we are thinking about. Which leads me to the next question, which I think may interest you. At least that one will not be very hard. So if you add £10 million, if I write you a check of £10 million right now to strengthen the local ecosystem, where will you deploy it first? And how will you measure if it works?
Do I need to put 10 million into one thing, or can
I've given you the check. You do whatever you like with it.
I think one of the first things, and I don't think it needs 10 million, but it's also one that people don't necessarily want to hear. I would put people in the ecosystem and put them in there, salary paid, not tied to any sort of KPI, and that would be the main thing. Not giving them any KPIs, but purely being around the ecosystem and connecting people. Because you see it everywhere, whether it's here or in Edinburgh. Like you have some people who you meet and you see them over and over again at events and things. And you can ask them if you talk to them. Like typically, like the first response, like, oh, have you talked to X or Y? And that's the people that you need. Like we talk about like attracting entrepreneurs, and imagine somebody coming to Glasgow. Where do they go? Like what's the right incubator for them? What's the right co-working space? Which kind of community should they link up with first? Like it's hard, and we sometimes like I think simplify that a bit by saying like, oh, it's a great ecosystem and we have all these things, but like the actual navigation for an entrepreneur, I think gets missed a bit, because we look at it in the sense of like, oh, we have all these things, but how do you navigate that? How do you do one thing but not the other? Or should you do this first or that first? Who should I link up with? How do I get in touch with them? Where do these people go? Where would I meet an investor? Or if I'm looking for a technical co-founder, what are kind of meetups or events that I can go to? So having people that are around, that are not measured in terms of, oh, you need to talk to X founders, or you necessarily need to host these events or anything, but people purely around as like connectors, I think would make a huge difference. Because again, that's how you increase the flow of information throughout the system. And it might even be things like funding opportunities being around, that they hear from one person, they're like, oh, I was down in London, there's I don't know, UKRI or something has funding available, or Innovate UK has funding available for prototype development or something for companies. And that person told me that, and they're like, oh, I talked to somebody else last week. Like again, like that information doesn't always spread in a way that it should, and people miss out. And entrepreneurs are busy. Like you're trying to build a business and talk to customers, and might have investors already that you need to report to, and like there's a million different things you need to be aware of and you need to deal with. So it's sometimes hard to like for yourself like find all that information if you need to look for it. So by having people around to help like spread information, connect people, I think so that would be one thing. Investing in people who are purely kind of around and increase the connectivity within the ecosystem would probably be one thing. And I think the other effort, especially for Glasgow and Scotland, would be around attracting more investment. How do we do that? And I think there's different aspects to it. We have, from different or through different organizations, like trips to Silicon Valley and these things. But can we purely increase connectivity? Can we put in, have more direct flights to New York, to Boston, to the Bay Area, to Berlin, or I think Amsterdam were covered quite well with KLM probably, but increase that connectivity, that you can go, that investors can come here. Can we put in co-investment funds that, again, where these investors can leverage some of that as co-investment through those 10 millions or through other like policy interventions. So I think those would be the kind of two main things. One is especially like the kind of growth capital that we need and the risk capital, and just increasing the connectivity. Awesome. Because we have incubators, we have accelerators, we have these things. I think it's really more about helping entrepreneurs navigate that.
Wow. So everyone copies Silicon Valley, What is one thing you will say we should stop copying as an ecosystem? And what is another one thing you will say we should double down on?
I think the key thing I think the copying is always bad, in a sense that what research on ecosystem tells us is that they're very context dependent. And context meaning like the history of places, the cultural, economic, social fabric of places is different. We don't have billions in defense funding here that goes into tech companies that you have in the US. So again, there's different things. We don't have pension funds invest in VC as much as in the US. Like imagine the size of like pension funds, even if they dedicate 1 or 2% more towards venture capital, it'd be a huge boost for the UK. But if we don't have that, there's just less money around. So we have less deals, we have less companies that grow, or they go to the US because that's where they can get the funding they need. So I think there's generally like I'm very much against copying it, and that's probably, it comes down to that. You can have the ambition of trying to build companies in the way and to the scale of Silicon Valley without having the resources and an ecosystem like that. I think that having that ambition, just if it's not backed up by the resources and by the ecosystem, it doesn't work. You might have the outlier company that makes it, and we had these success stories here, but they're also still outliers. We're not producing, and I don't want to like glorify the unicorn concept, because I also think it's become a target in itself, that companies just want to become a unicorn, and also the valuations for some AI startups I think are a bit off. But chasing that without having the capital in place to build these companies just doesn't work. So I think that between that ambition of what we want to build, the types of companies that we want to grow, how we want to support entrepreneurs, and that Silicon Valley style of entrepreneurship is just not necessarily compatible. There are aspects about it, of course, and whether we narrow that down to like the tech sector in a stricter sense, or others, that the culture of doing things, like how many people at Stanford try out things and become an entrepreneur. We can argue maybe not everybody should be an entrepreneur, not everybody wants to be an entrepreneur, and I'm not saying everybody at Stanford does, but that's fine. But I do think more of an entrepreneurial attitude, like again, getting people to just try something. Do the most basic things. I think there was a survey even in the US, and I don't know the exact number, but basically everybody who said yes to the question, have you ever had an idea for a company or a product or a service, which I think most of us did at some point, like, oh, somebody should build this, or I wish this existed. But only, and this is American data, and I think only 40% or 35%, or so, I'm not quite sure about that number, did even do a basic Google search if that product or service exists, or if anything exists, or if somebody had thought about that. And that's what I like. That's what I tell students quite often. Like the very first class, if we teach like an introduction to entrepreneurship, is if you think you have an idea, if there's something you want to do, and you just do a 5-minute internet search, you're now ahead of like 60% of the population. So that still doesn't mean you still have a very long way to go.
Of course.
But if you switch the perspective of like, okay, most people don't do anything, and that's, again, not saying everybody needs to, but switch the perspective. Suddenly you have, 60%, you're ahead of them. Put together a very basic idea. Use venturism. Just think through what you need. Could this work? Like that probably puts you ahead of 80, 90% of the general population, and suddenly you have something you can work with. Like it's not just about planning from the get-go of, I need to raise 2 million. Like nobody, like again, those are the outlier cases. But for most entrepreneurs, it starts with like an idea. It starts with something they want to do, something they're passionate about. So taking these little steps that you can do while you're a student, while you're maybe still working, or it doesn't need to be full time, but you can get started on it and then realize, there's something there. And I think if we can get a bit more of that, I think that would make potentially a massive difference. Which then again leads to the problem of, if we have all these really good entrepreneurs, do we have the ecosystem to support them and allow them to grow? But again, you have reinforcing feedback loops where if we have more successful startups, more resources will come. And that is my hope, at least, that we get there.
I hope we get there. What belief about entrepreneurship did your research force you to change? Maybe you have a notion, an hypothesis before you started your research, and it's you confront those research with data, with reality, and it doesn't hold. Is there anything?
It's difficult to think like whether it's I don't think it was ever necessarily my personal belief, but certainly the idea that we have these like hero entrepreneurs, and there's exceptional people, exceptional entrepreneurs who make things happen that we can probably say nobody else would. But even then, if you look at most of their stories, there was like support around them. So this idea of like having like the entrepreneurs as lone star maverick hero, that I think should be challenged and also has been challenged. And that's part of what the whole ecosystem perspective shows us, is you need that support. If you don't have universities and talent around, you can hire. If you don't have investment that can help you hire these people, build out factories or production, whatever you might need, or pay for compute, you're not going to scale. So it needs other parts of the business, and that doesn't devalue what the entrepreneur does. The entrepreneur is still the person in charge, still the person who's driving it, still the one with the vision. But it's not just that person. It's how everything else around like feeds into that. There was a recent discussion, and I think Paul Graham wrote a blog post about like founder mode and how founders are kind of uniquely positioned. If you need to, like, they can do things that a hired CEO can't in many cases. Like there is this, you have a different sort of authority. It's your vision, it's your company to change things. And I do think there's something to that. So again, it's not by saying it's not the lone star, the lone wolf, maverick, hero entrepreneur, doesn't devalue what the entrepreneur is and does and contributes. But I think it provides a more robust perspective on what entrepreneurship is, and it's not just that one person. The whole idea of when people talk about, oh, soon we're going to see the first one-person unicorn. Well, that's heavily technology enabled. It's not that, like, yes, that person builds that business, but without AI, without agents and everything, you're not building a £1 billion, $1 billion company as an individual. There's a reason that hadn't been done before. So again, it doesn't, if somebody does that, absolutely, hats off to you. You identified a problem and build a solution on your own or with the help of AI. Like that's an incredible feat. But again, there's enabling technologies, there's things that are happening around you, there's provisions that you can build on. So that's maybe one thing, like the more and how context specific entrepreneurship itself is, like how it's viewed in different parts, how that is linked to like the general history and like socioeconomic fabric of places and the places where entrepreneurship happens. I think that's another one that maybe for me I might have not necessarily expected before.
So as a teacher, what exercise can a student founder do that can upgrade them the most?
I think the biggest thing is iterate. Don't try and over optimize something. Don't try and make it perfect, make it work, iterate, then try and make it perfect. I think that's one thing we see quite a lot, and what we try and like even build into our courses and everything, that gets students to identify a problem or a technology that they want to commercialize, or even something that they're interested in. Go out and talk to people. Don't sit at your desk and you think about what people might want or need. Talk to the people that would actually use your product or service. What do they say? And it's not about detailed interviews or anything. Just talk to them, and as many as possible, which then also at that stage prevents you from going into too much detail, but gives you the general idea of what they might be looking for, what the real problem is. What do they emphasize when you ask them about the challenges they face in certain parts of their professional life or private life or whatever it might be? What are the things that come to mind for them? Is that the same as what you're thinking? Okay, if it is or if it's not, you pivot or you stick with it. What could a solution be? Okay, talk to people. Like, don't just build something, talk to people. And kind of work through that, rather than trying to like spend a whole semester or a whole year or half a year as an entrepreneur sitting at home trying to build something that you then realize, I'm not addressing the core problem. Like, this isn't what people really want. And then you basically start from scratch, worst case, or maybe you can adapt, and some of that might be useful. But I think this idea of iterating, and again, there's certain aspect where it doesn't work, like drug discovery and things like these things work slightly different. But I think for most entrepreneurs, this idea of iterating, don't over optimize things too early.
Yeah, thank you so much. I need you to finish this for me. A good model is
One that is useful.
awesome. Thank you. So I am going to give you a quick fire, 5 of them, maybe 1 or 2 sentences. One metric founders overrate.
Probably registrations of interest, sign-ups and things. Everything that leads up to a sale, I think quite often gets overrated because it changes by the time you really ask people to pay for something. Everybody will tell you, I like your product, I like what you're doing. If you ask like, okay, would you put your credit card down right now? You can see how it changes. So these numbers, these things are good, but they're not the same as sales. So I think that's one thing I think that might get overrated.
Awesome. One variable you wish all pitch deck shows.
Oh, I don't know if it's a variable, but to me, things that we learn from Venturum is about why people buy, like, and what their decision-making process looks like. Why would somebody buy? And I don't think you can capture it in one variable, but that's one thing at least I would like to see, rather than saying, oh, we have this product and this is our market. Why are they actually buying it? What is the process that goes into that? Because I think if an entrepreneur can credibly show that they understand that, again, you're onto something.
What's harder, collecting the right data or asking the right question?
I would say asking the right questions, because if you do that, you're probably also getting good data. Good data is relative to what you're trying to get out. But if you're asking the right question, if you're looking for the right things, that means you understand your business, you understand what you're doing.
A book or a paper you keep returning to?
There's many helpful things, I think, and I'm very happy to send a few like recommendations. I think if we specifically talk about entrepreneurship, there is a paper by a former professor from the University of Strathclyde, from the Hanna Center, Jonathan Levy, around basically stages of growth, and they're comparing different models of how we like basically slice up what the growth of a company looks like. And there's a plethora of like models and everything out there that does that. And essentially what they're saying is like an entrepreneur can't really follow these. What you need, like you're in a unique state and you make decisions based on where you are, what you have at your disposal, and where you want to go. No kind of standard model can, like, or standardized model that's like written in a book or somewhere else will be like necessarily applicable to you. So that idea again, which comes back to like a kind of complexity thinking, that it's not a predetermined kind of path, but you need to make these decisions relative to the time and where you are and what you do. So that's one paper that I think is both in academia and in practice undervalued.
Awesome. Lastly, what's one sentence you will tell a founder that is drowning with uncertainty?
I would say do things. And I think it goes beyond an entrepreneur. But if you've doubts, if you're overwhelmed with like options, you don't know where to go, there's lots of uncertainty, do something. Like you typically get clarity from doing something, whether that's starting to like write things down and sketch out what it might look like, or again, break it down into like, what's the easiest thing that you can do that will reduce some of the uncertainty. Maybe it's just talking to a few people, maybe just randomly, even if you don't know where to start, randomly talk to a few people about what you're facing. And again, I think that process of doing something, you get clarity from writing, from doing, and not necessarily from thinking. Thinking helps you make sense of all of that, but if you're at that point, you probably need to do something rather than think.
Thank you so much. Very much.
It was a pleasure.